Easy Slim sells ready prepared meals to customers on a weight loss program. Easy Slim's budgeted income statement for July, August and September is provided below. So we've got some items here. Some of them will be cash items, some of them will be non-cash items. And then it's telling me a little bit more information. It says, based on past history, 40% of the sales are made to customers who pay cash at the time of sale. The remaining sales are provided on credit to customers, 50% who pay in the month of the sale and 50% who pay in the month following. Sales in June were this. Suppliers provide goods on credit and paid in the month following. Okay, so that's important information. No inventory is maintained as the goods are highly perishable. Accounts payable at the end of June was $40,000. Other expenses are paid in the month they are incurred. Dividends of $25,000 will be paid to shareholders in August. Loan repayments of $20,000 per month will begin in July, and the cash balance is at the 30th of June is $4,000. Now it actually asked me two things. It says complete a schedule of collections from the customers for July and August. You will have to complete a schedule of collections. Okay? But first things first, let's have a look at this. What we need to do is we need to pick out the information that we require in order to complete our schedule of collections. So first things first, we're doing a schedule of collections. So that is based around my sales revenue, and it's based around the information that's in my first point about my sales. So now what do I need to do? I need to now calculate my schedule of collections. Okay, so we're looking now that, let's have a look. We've got sales for June, so let's go schedule of collections. And I've got my sales here. And we've got June, July, August. And it's asked me to do a collections for the months of July and August only. So we don't have to worry about September, we only have to worry about July and August. Okay, so now I'm going to do collections over here. And this is for July and August. Now my sales for June, it did tell me my sales for June were 90,000. My sales for July are 100,000. And my sales for August are 120. It's given me some more information than I require, but I don't have to do anything for September because the question only asked for July and August. Now, based on a history, we know 40% of my sales are made to customers who pay in the month of sale. So I pay cash. So 40% of my customers are cash. And then the remaining, so there's 60% remaining. So I've got 60%. 50% of those pay in the month of sale. So I need to multiply that by 50%. So I've got 40% plus my 50% of my 60% happens in the first month. So what's that? That makes 40% plus 30% gives me 70% in the first month. And of the 60%, 50% pay in month after, so that makes me 30%. So I've accounted for all my collections. There's no other bad debts or anything like that. So what now I need to look at is, I go, of June, 70% is collected in June. So how much is collected in July? 30%. Now of July, how much is collected in July? 70%. And how much is collected in August? 30%. In the month after sale. So of August, I collect 70% in the month of sale. So I just give myself my little clues as to what I'm putting in each of my columns for collections. So 30% of $90,000, so I'm working out my collections of my $90,000 here. 30% will give me $27,000. And of July, I collect 70% in July of July sales in July, so that gives me $70,000. And then I look at July, how much do I collect in August? $30,000. And what's 70% of 120? $84,000. And then my collections equal 97,000 and 114,000. So that's my collection process.